Hello everyone, I am your Bhala-G. Welcome to a new video. In this video, we are going to see some of the reasons why people avoid investing in stock market and also verify whether the reasons are really true or not. So we have asked this question to a number of people and their reasons are summarized in 4 major points. First, people think investing in stock market are very risky. Second, people think no strong educational background in finance, so they can't able to invest. Third, they believe small investors cannot make money from stock market. And fourth, at last, they feel it's difficult and they don't have time to analyze and find good companies. And these are the 4 points they feel they are not investing in stock market. So let's analyze. First, they feel investments in stock market are very risky. So what it means by risky? Because whoever invests in stock market, they want to be in profit. But in stock market, people feel sometimes they might be in losses too. These are a chart of Nifty 50 for a different period of time. Nifty 50 is nothing but the indicator of growth of Indian stock market. And here we can see, if we take a period of 1 day, yes, there is a decline in the value of 0.62%. If you take it for 5 days, again there is a decline of 0.44%. If you take a period of 1 month, there is a growth of 0.76%. And if you take a period of 6 months, again there is a growth of 18.17%. If you take a period of whole complete 1 year, then there is a growth of 7.6%. Let's go for long term. Here, it's from almost 2001 to 2021 for a period of 20 years, and it has we can see there is a growth of 1981 times, almost 2000%. Yeah, it's right. Yeah, stock market can be risky for short term. We can also see there are few times where there is a decline in the prices, but maximum these phases last for 6 months or a year max to max. In the longer run, for a period of 5 years or 10 years or 20 years, of course we can observe there is always growth in the stock market, that to massive growth. So we always think investing in stock markets are risky, but most of us invest or save in stock markets for our long-term goals. What are the long-term goals? It can be buying a dream house, or buying a dream car, or saving money to start a dream business, or saving for children's higher education, business, marriage, or their future, or some people save for their retirement days. All these goals are for long term. What do I mean by long term? They are for 5 years, 10 years, or even 20 years. So if you are a person who have these goals in mind, then of course you can able to invest in stock market. Stock market might be risky for short term like 6 months or 1 year maximum, but for a period of long term like 5 years, 10 years, or 20 years, we can expect massive growth in stock market. So the first point is covered. Coming to the second reason, no strong educational background in finance. To address this point, we can go and see some of the top successful billionaires in India. The first is Radhakrishnan Damani. He is an undergraduate. Second is Rakesh Jhunjhunwala. He is a chartered accountant. And the third is Moinish Parabai. He is a software engineer. And the fourth is Vijay Kedia. He was a degree in BCom. And the fifth is Purinchi Veliath. He was a degree in Bachelor of Laws. Yes, all these people have different educational background and different knowledge. Some people are even software engineers, some people even hold a degree in law. Yet they are some of the successful billionaires in India. And coming to the world, fine, India is fine. We all know Warren Buffett, who holds a degree in Master of Science in Economics. And second is Carl Icahn. He holds a degree in philosophy. Third is Jim Simons. He holds a degree in mathematics. And for this, George Soros, he holds a degree in science as well as philosophy. So we can see even either India or world, the top billionaires have different educational background. So they don't have a strong educational background in finance. That is not common, but they do have some common qualities like learning attitude. Yes, all these people have a common quality like learning attitude, along with some very good qualities like discipline, emotional balance, money management. Yeah, in stock market, these are some of the very important qualities which we need. If you are a person who have learning attitude along with discipline, emotional balance and money management, then of course you can definitely excel in stock market. Third reason is people used to think small investors cannot make money from stock market. They always think I have only very little money. Only people who have lakhs and crores of money can able to make money from stock market. But we all miss a point. Whoever reached top, of course, they would have also started small. I can give you one live example. One is Purinji Veliath. Earlier we saw one of the top successful billionaires in India. He comes from a very poor family from Kerala. And even he struggled for his education due to his financial condition and joined Ernakulam Telephone Exchange for work. And he completed his law education from Ernakulam Law College. He don't have money in childhood. He doesn't come from a finance background. He doesn't hold a degree in finance. Yet, he worked in base level at Parakpai Securities. He had learning attitude. So he learned about stock market there. And along with his experience and knowledge, he started his own venture after some time called Quality Intelligence Private Limited and became one of the successful billionaires in India. So, of course, starting small, still we can go for bigger places. So he's one of the great example for that. Reason 4. Most of the people think it's difficult to analyze and find good companies. I can give some of the examples like some of the famous companies like Britannia. We all know, right? The last 5 years, it has given a massive return of 87%. And ICICI Bank, one of the major bank, given a massive return of 186%. Instead of having fixed deposit in ICICI Bank, if we invested in ICICI Bank, they would have been wealthier right now. Ambani's Reliance has given a massive growth of 182% in the last 5 years. HDFC has given a growth of 73% in the last 5 years. Hindustan Unilever, most of the household items, either soap, shampoo or whatever it is, comes from this brand. And this well-known brand given a massive rise of 95%. SBI, State Bank of India, given a massive growth of 92% in the last 5 years. All these known companies gave a great massive returns in the last 5 years. Exactly. So we don't want to analyze and find some penny stocks or unknown stocks. Even known stocks where we have our example, if you are a person who have accounts in these banks, of course you trust this bank, right? Then you can also invest in these banks, or if you are a person who are using some of the products of these industries like Reliance, Britannia, then Unilever, we can also invest in these brands at least. Still we can able to get a massive return from stock market. Exactly. So it's not difficult to analyze and find good companies. We can just invest in the products of companies which we actually use. As simple as that. So after seeing all these things, it is clear that, to be frank, the reasons for not investing in stock market is not all these reasons. It's mostly the fear to do a new thing, which is common for all new things which we try. Yeah, exactly. And I do accept investing in stock market requires some additional effort. But remember, by putting this additional effort, we can give ourselves a chance to reach our dreams for sure, and even early than imagined. So keep learning and keep earning. Hope you like the video, and if you like the video, click the like button, and if you want to watch additional financial contents like this, click the subscribe button. See you soon. Until then, it's bye from Bhala.